Good morning. This is a morning brief for the U.S. stock market, audio version. It's June 28th, 8 o'clock a.m. Eastern Time. I'm Rich Possum for Critical Point. Okay, let's begin with the very short term, extreme short term, the level 4 interweek swings that are sometimes only an intraday swing. The level 4 is due to bottom today into maybe the early portion of the overnight market, but ideally today. It's possible it has bottomed during the overnight market, and I think convincing trade above 4,277.50 for the September S&P 500 E-mini futures would be a sign of a level 4 bottom. Now, the market's not oversold intraday-wise, so that's working against this. Confidence is not that high. As we zoom out to the daily chart, we do find indications that the market may not be following its normal level 4 swing, but that currently is the best forecast. Now, if you draw a trend line from the May high through the June high, you can see the market punched through that Friday, made a record high, and then backed off a little. Overnight, you can see the futures punched for another record high and have eased off a little, but are holding above that trend line. We got a trend line breakout. Now, that's only a tentative trend line. It may not actually work. It may be meaningless. Overnight market seems to be respecting, seems to be acknowledging it. Now, on a daily chart basis, this market is extremely overbought for our daily indicators. So that's warning that the model can be right, that the next larger trend, the level 3 trend, the largest trend during a month, perhaps for a month, is due to end. And that trend has been up. We correctly called that. If you may recall, we called the bottom of June 21st, and the market exploded and totally rejected the previous trading day's sharp decline. And I like that. Very strong action. That's entirely momentum-based, rate of change, price change. Okay, when you look at some of the fundamentals economics, there really wasn't much going on. They got carried away of being bearish and overreacted off any bearish news, inflation news, interest rate stuff, and the Federal Reserve. And then they turned bullish, and we told you they were going to buy for like the next 5 to 9 days. Well, guess what? We are 1, 2, 3, 4, 5 days as of today. So a correct forecast, okay? But it is overbought. It is warning a level 3 top can occur this week. Current best forecast is it should not occur till tomorrow. So I think this level 4 forecast is going to work. It's going to bottom today. It's going to be higher tomorrow. And that's your intra-week swings. It may be lower the next day. Don't know, okay? But the point is that means there's a good possibility, yes, this market's going to stay up into tomorrow at least. It may stay up all week. The next level 3 bottom is due early next week. It does suggest a chance eventually there will be selling from this week into next week. How much selling? Current indications are it's going to be minor. It's not going to be a big deal. It could be fast and sharp, and then someone will just step in and buy it. We do know that the true range, daily true range, is in decline. So this market is less volatile as it rallies and as it's getting overbought. This kind of suggests, yes, there could be a sharp downturn and volatility jumps. It's time for volatility to increase. But what if price surged first, and then they pull it back into that level 3 bottom that was also volatile? What if we really got a coasting kind of bottom here that didn't work and got more volatile upside later? Not sure how this is going to work out, but we're currently assuming limited downside. 5-day average is currently nearby support, a chance for a level for them to buy. It could be a level for them to sell and break down, but currently think it's support, okay? If we see trade back to around 42.30, we'll have evidence the level 3 trend is down. But it may be too late to take advantage of that. I'm not interested in trading level 3. I'll do my best to call it for you if I can. Now, once this level 3 is out of the way, the next level 3 uptrend is likely to also be bullish in the sense of creating yet another record high, or at least testing a record high, and that the larger trends of level 2, level 1 are up from the May low and the February low, or maybe March low as an alternate. And 2 weeks from now, it's the earliest, perhaps ideal time to top all the major types of trends, meaning all the major players, those 12 major groups who control the market, they're probably going to flip to selling. Now, some of them will only sell for a day or two, and then they'll try to move the other way, but they'll find resistance. They're going to find the larger sellers won't give up. And some of them, like for the level 3 trend, are going to try to buy from time to time. They're going to be wrong, okay? The level 2, level 1 trader is going to be in control of this and may sell from July into August. They may sell for up to 4 weeks. But current indications is they may sell only for a week, maybe 2 at the most. It might just be another sharp decline. And currently I'm looking for only a 4% decline from whatever the record high is into that coming level 1 top 2 weeks from now. I think that's all it'll be. We'll then get a level 1 bottom, and we should start another up move into year end. And all of this is inside of a long-term bull market, and there's a variety of types of bull markets. One of them will be over by sometime next year, but it'll turn out to create another buy because the next larger bull market will last into 2024 to 2026, where there'll be a more significant correction. The major long-term bull market, the one we really want to make sure we follow, is probably going to last to near the end of this decade. So there's still plenty of time for upside, plenty of profits to be made in this bull market, but there will be a variety of twists and turns and corrections along the way. We may get a 10% correction next year. I don't think we're going to get one this year. We can't rule it out, however. So the bottom line is still long-term bullish, but we're due for the most important type of correction during a year to occur in the next 2 to 4 weeks. But I don't think it's going to live up to past history. It's going to be one that just doesn't work that well. I don't think there's a lot of downside here. I think this slower pace of increase for this market since, say, April has actually been a healthy thing, and the economy is catching up to the market. And eventually, I think the market may well surge going into the end of the year here. Okay, I do think 4,300 is a near-term objective here to watch for the S&P 500 cash. But I also think it could be significant resistance for a few weeks, for a few months here before this market moves forward. Okay, what do we have for outside markets here? I'll move on to, let's bring this up. Okay, the bonds and interest rates seem to be stuck in a range now for, 8 weeks? I think that range is going to continue, but there could be a slight bias towards lower interest rates in the next few weeks, perhaps even into late July. That could help support the stock market. By August, I do think interest rates will rebound, but not as strong as we had forecast months ago. I'm convinced we've already seen a minor long-term in interest rates back in April. But it is possible interest rates will surge, that they will be a new high for the year. Then we get that long-term setback in interest rates into next year. And I do think inflation will be lower next year. I think inflation should be peaking soon. Now, on the dollar, I said there's a chance of a level 2 top in place as of 2 weeks ago. I said that last week, but I also warned there may only be a level 3 pullback last week. Well, this morning, the dollar's trying to rally. I'm now thinking, yes, we saw a level 3 pullback last week. We're going to get a level 3 rally this week, and there's a good chance it's going to move to a new high compared to the high of 2 weeks ago. And then we're going to get that level 2 top, and the dollar can kind of ease back a little bit, perhaps into late July to early August. Now, for the gold market, I think it's probably working lower into late July to August. But it's oversold enough that we can get some rebounds the next few weeks. I wonder, maybe it's just going to be a range trade now into that bottom they just spoke of. I think there's a limited upside in gold. The bulls just don't care about using gold here. In the Bitcoin, is a possibility that it's calmed down enough here and putting in a level 1 bottom, and it may even be a minor long-term bottom. Problem is with that audio or video I did on the Bitcoin here, was it last week, I think, there is still long-term downside potential for a while here. There is risk there to the bulls. So I want to watch it a bit here. Has it truly bottomed? If you think you've got reasons, if you think you're more confident than I and convicted, I must say we got a little bit of evidence that it's bottoming. But I'm just concerned it's going to fail. I think if it trades below last week's low at 28,957.79, there could still be considerable downside in Bitcoin. In crude oil, we've got the market where it's now high enough price. I doubt it's going much over $75 a barrel. It's extremely overbought. It's prepared to roll over for a sell signal on the weekly indicators. The model's warning it could top this week. That's really earlier than it should be. A little later, sometime in July, I would prefer to turn bearish crude oil, and we could put a minor long-term top in that would support our bearish stance for commodities in general when looking out to next year. I think sometime this year, most commodities, maybe all of them, top out this year and move lower in the next year. That supports that lower inflation theory. Okay, I don't have much else to say here. Let's give the bulls a chance in the stock market. I don't think these outside markets and interest rates are going to bother it, interfere with it. I think you just got to watch the stock market news primarily and watch what's going on with this potential infrastructure bill. Might inspire them. But overall, one way or another, I think this market's going to keep moving higher, maybe a slow pace. Would like to think it's time for it to surge. But we just have to consider it still may be a slow pace and a bit of a struggle here. But I got to give it a couple of more weeks before we have to assess, is it worth doing something about the possibility of one of the more important corrections here in July and August for the stock market. Past results are not necessarily indicative of future results. Have a great day.